Saturday, May 9th, 2020, MONERO 64, home of alternative economics and contrarian views. Today I want to talk about the growing inflation tsunami, the growing debasement of all national fiat or paper currencies. It's going to get worse. I will go through some of the track record of the major currencies in the last couple of years versus real money, of course, which is gold, as we know. And why is gold real money? Well, it's held by all the major central banks of the world. It's been part of the monetary system forever. It's not officially part of the system right now, but why would central banks and governments hold gold? Well, because it's money. It's been the most stable store of value over the millennium. It is also the best yardstick of value through time. Paper currencies, as we know, go to zero eventually, and so will the paper dollar. Before I start, though, I'd like to recommend one really good video I watched this morning and a really good article I read yesterday. Well, the video is more to do with what's going on, and it's a great report by Amazing Polly, and I'll put it up in the cards and below in the description. And what Amazing Polly talks about will show you that the financial and economic side of things are not going to get better. I really recommend you watch the whole video. It's just under 40 minutes. So that's the video. I'm not going to say out loud what the title of the video is, but I highly recommend it. The second thing that I think is really interesting that you need to, if you have time, you don't have to, of course, but it's an article by Alistair McLeod. He does research for goldmoney.com. He writes some really good articles about money, and on May 7th, he wrote an article, Time to Learn About Money. I highly recommend it. It will probably take you a long time to read it. And I have to say, I agree 100% with what Alistair McLeod is saying about the system, that we don't have that much longer until all this system crumbles into dust, all the paper currencies, and that's when we'll get the total loss of confidence in paper. So highly recommend that. So now I'm going to go over a few things that I think are showing that we're moving closer and closer to this point where people start losing faith and confidence, and the demand for their national currency decreases. What does that mean? Decreased demand? Well, it means that if you have paper currency in your possession, you're going to let it go. You don't want it. And that's what creates inflation, is the loss of confidence in the currency, the demand for it. Before I look into the major currencies and what they have been doing against the ultimate yardstick of value, I just want to look at the data that came out yesterday, the NonFarm Payroll. The unemployment rate, of course, was the big headline. Biggest unemployment rate since World War II, 14.7%. Of course, it was expected 16%. So it was, the markets were looking for a worse number. But what caught my attention from these numbers were the earnings part of the number. The average hourly earnings month on month was expected to go up 0.4%. And it went up by 4.7%, a multiple of 10, more than expected. It just goes to show that the mainstream economists are not looking at the bigger picture. They haven't been trained into knowing what real inflation is. Nowadays, of course, most people think that inflation is the CPI or the PCE. They don't understand that inflation is the abnormal growth in the amount of money and credit in the system, not based on real savings. I've made several videos about that, explaining how they've corrupted the meaning of inflation. So it's going to come and no one's going to expect it. And I haven't seen too many people talk about the earnings part of this number. All they're talking about is the unemployment rate. Well, the average hourly earnings on an annual basis or year to year for April was expected to go up by 3.3%. It went up by almost 8%, 7.9. So am I saying that earnings and wages create inflation? Of course not. And that's what the major economists and the central banks say, though, that higher wages are inflationary because they want to put the spotlight away from them, because they're the culprits. They're the one who create the money and credit out of thin air that leverage the system. And how does the Fed do that? Well, by keeping rates at almost zero. That encourages the commercial banks to lend even more. And of course, it is the commercial banks that create the money. Every time they give people a loan, they're creating money out of thin air. And of course, we know that they don't give loans commensurate with the amount of deposits they have. They multiply it. It's called the fractional reserve. So that's what you need to know about inflation, is the creation of money and credit out of thin air. It's not based on savings, real savings. And the central banks facilitate that through their low rate regime, zero, sometimes negative, and also through QE. QE basically puts money in the pockets of Uncle Sam. That's what it does indirectly, really, through the banking system. So now I want to talk about the debasement of the major currencies in the last 2 years. And I'm going to look at the price of gold in May 2018 and the closing price of gold yesterday for the major currencies. So the US dollar, as you can see here by this chart, where we were in May 2018 and where we are now, that's a 29% increase for the price of gold, which means the dollar's gone down 29% versus gold. British pound, same scenario, May 2018 to now, and the difference there is 41%. So for the Eurozone, what's the Eurozone? Well, those are the countries in the European Union who use the euro. Not all countries in the European Union, of course, use the euro, but the euro is dropped even more. It's 42%, 1% more than the British pound. Japanese yen, 26%. So it looks like the yen has outperformed a little bit the US dollar and the other currencies. So much for the dollar being so strong, right? And I've said many times, people need to forget about the dollar milkshake theory. They need to look at the gold milkshake theory. That's where the money's going to go. That's where the value is going to be maintained for your savings. Canadian dollar, 40%. So similar to the euro and to the British pound. Aussie dollar, unfortunately, for my Aussie viewers. And hopefully you have been protecting your savings with gold and some silver as well, even though silver hasn't performed as well. Aussie dollar is down 50% versus gold. So there you go. This is not going to get better. And why do I say that? Well, because if you look at the Fed's balance sheet and M2 money supply, you see that things are accelerating in terms of inflation. I look at the real definition of inflation. I haven't corrupted the meaning of inflation. And I've gone through this in my other videos, but I'll go through it again quickly. That's why I go back to my Merriam-Webster pocketbook dictionary from the 1970s. It used to be my dad's. And on page 365, we've got the definition, the real definition of inflation. So it says, an abnormal increase in the volume of money and credit resulting in a substantial and continuing rise in the general price level. So that's the true definition of inflation. And this is from the 70s. So nowadays, if you type inflation onto Google, this is what you get. It says inflation is a quantitative measure of the rate at which the average price level of a basket of selected goods and services in an economy increases over some period of time. So it doesn't say anything about the supply of money and credit. So as you can see here, they don't really give you the definition of real inflation. What they give you here and what they have defined as inflation is the consequence of inflation, which the Merriam-Webster dictionary used to define. I've looked at the Fed's balance sheet. Of course, the Fed's balance sheet doesn't translate exactly onto M2 money supply, but since August 28th, 2019, when we had the post-quantitative tightening low in the Fed's balance sheet, it was just under $3.6 trillion. The annual rate of increase of the Fed's balance sheet has been 113.53%. Looking at M2 money supply, for the last 2 years, it's increased at 25.43%, which kind of equates to the debasement of the dollar versus gold, which was 29%, right? Very close. But the most worrying thing, and that's why I said in the beginning of the video that you need to be concerned about this growing tsunami of inflation and currency debasement, is that since February 24th of 2020, the M2 money supply is grown at an annualized rate of 75.68%. So, and that was until April 24th. That's the latest data that the Federal Reserve Bank of St. Louis has. So you can imagine if that keeps going, if the pace of inflation, if the central banks keep expanding their balance sheets, which looks very likely. We saw the national debt just go over 25 trillion in the US this week. If you look at the US debt clock, it's forecasting 42 trillion for 2024 and about 75 trillion for 2028. I know the Fed's balance sheet has slowed down recently, the rate of growth, but I think is going to pick up again. And even if it doesn't pick up, all this creation of money and credit that we've had in the last 6 months still hasn't translated into rising prices. And I think looking at the earnings data from the NonFarm Payrolls, it looks like all that money is starting to flow, not just into stocks and bonds and paper assets, but also into the real economy, into the workers. So that's why, in my opinion, people need to hold on to their precious metals if they can. People need to get a hold of precious metals if they can. It's still not too late. And hopefully that will help you and your family survive this coming depression. Well, it's already here. And if you listen to what Amazing Polly says in her video, you see that this is just the beginning for this crisis, I think. It's nowhere near being over. So for my viewers in the UK and Europe, of course, I have my promo codes for gold investments and for Glint as well. I recommend that you do your homework, that you get the best deal, of course, but I think Gold Investments and Glint are good alternatives. MONERO 64 is the promo code for Gold Investments, and Mario Glint 79 is the promo code for Glint. Glint, of course, is also available for my US viewers, not just UK and European viewers. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to the channel if you haven't yet. And you can also follow me on Twitter, Facebook, and all these other platforms below here. So I wish you all a great weekend. Take care. Bye.